Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
Hello, this is Tim Fergestad. Thank you for joining us. I'm very pleased to have Anna Sepic with me. Okay, that's so funny. I've never edited a video, and I think I am gonna now.
You are totally fine. You can keep it that way too. It's fun.
All right. Well, she's an experienced multifamily owner operator turned sales broker, investment sales broker. She works with a lot of different people and a lot of different projects. Welcome to the show, Anna.
Hi, Tim. It's great to be on. Thanks for having me.
All right. So, why don't you start by giving us sort of a breakdown of what you're currently focused on, and then we'll talk about all the crazy things you've done and what got you here.
Yeah, absolutely. So I'm currently with SRS Industrial. Most of you, if you are familiar with SRS, they were strictly a retail investment brokerage company. They also had a capital markets and did a lot of tenant representation nationally, formerly of the Staubach Group, which might also ring a bell for folks. But in the past couple of years, the company's really been in a growth mode and looking at how are we converting all of the retail clients and taking care and ensuring continuity of care for the clients in an industrial role. And so I'm one of the first members that helped start the Phoenix Industrial team for SRS here. So we just opened shop in February officially.
Oh, wow.
And so working a lot in the industrial space. Predominantly, my background is in the development sector of land. It was predominantly multifamily before, and then kind of as each darling child of the market changed, it went into self-storage and then industrial, and industrial has continued to be a strong performing asset. And then I also do quite a bit of tenant representation, but a significant portion also in buyer broker representation, which I really enjoy.
Okay. So you're still wearing a lot of hats.
Still wearing a lot of hats.
Okay.
Yes, there's some things that's kind of hard to take off because I'm just passionate about real estate, quite frankly. And once you kind of understand the fundamentals of what makes a deal happen, and you just get the correct data to input in,
Right.
it really is easy to, make an analysis of whether it's a deal or not.
And if you're familiar with the different asset classes, one deal versus another deal is not terribly different.
Yes. Retail, I do try to shy away from that. That's a lot of leases and everything else, but just industrial, multifamily, self-storage, I kind of call them all they're all like rentals. It's just whether they're people occupying the space or not, or stuff occupying. So I tend to feel very comfortable in that sector as well.
Okay. Yeah. Excellent. So I'm excited. This is like a real estate special episode. I don't have too many real estate people on here. Unfortunately, I should maybe get more, but I did a week or two ago, I had on Kelly Royal. She's a industrial broker with JLL, and she specializes in like the big warehouses in the West Valley.
Yes.
Which there's a few right now.
There has been quite a bit of inventory that was developed in the run-up, and everyone was kind of all in that 500 to 1 million square feet.
Yep.
When I was working with a lot of developer clients, kind of underwriting land deals and looking what we should be building, I was leaning towards, guys, there's none of the smaller stuff. But again, it was, price dictating. Right. A lot of the pro formas on that. And right now we are seeing the effects of that, right? So there's high vacancy in that large space. There's a lot of users that are anywhere between the 30 to 150,000. And so a lot of that big box industrial warehouse that was built in the run up is now starting to get subdivided to accommodate for those small to mid-sized.
Right. Okay, that was sort of my next question is how much of that is being sort of condominiumized or whatever you say, right?
It's not necessarily being condominiumized, but they are splitting it into the suites. But speaking of condos, that's what we call the flex warehouse or a flex condo. That is in huge demand here in the Phoenix market. So that's typically anywhere between your 5,000 to, let's call it 10,000 square feet. It's usually about an 80-20 or a 90-10 warehouse to an office ratio. So it's
Right,
really your like HVAC, your different smaller mid-sized contractors, any of like medical supplies, some of the kind of one-off retail uses. They really like
right,
that. They can store a lot of inventory and have that small storefront, so to
right,
speak. Unfortunately, the cost to build those was really expensive. And then as we saw during the run-up, land went astronomically expensive. So you used to be able to buy industrial land anywhere between $4 to $6 a square foot. Then it
okay.
jumped up to 8 to 10. And
Oh,
depending
wow.
on what submarket you are in currently, like Sky Harbor, Deer Valley, other couple infill locations, you're anywhere between $15 to $25 a square foot on a trade price just for raw land.
Right.
If it's a
Wow.
small, like a half acre, that what we call an IOS or an outdoor industrial outdoor storage site, those ones are going nearly up to $30, 28 to $30 a square
Wow.
foot for a little
So
lot.
it's what's that for half acre? Probably about 600,000 or something.
Yes, yes.
Okay.
So
Yeah.
conservatively, a 0.36 acre lot is going to be running you about a $500,000.
Okay. Okay. Um, okay. So what what percentage of your focus right now is industrial? Was it
Um,
20
it's no, I
or
do.
no?
So existing industrial, it's about 20%.
Okay.
I do a lot of ground up development. So a
Right.
lot of my clients are either small to mid-size and also institutional developers. So we're looking at land anywhere between 7 to 150 acres to develop some of the industrial parks or small bay storage. And so that play very well in that space. And then I also still have a lot of continued clients from my heavy multi-development days that we're still active in the multi-development space. Arizona just continues to be a very strong performing market and a
Right.
state in general. So even with talks of like recession and market corrections, Arizona just continues to perform just not only because of our diversification of employment sectors,
Right.
but quite frankly, it's sad to say, but if California continues on its train wreck trajectory, Arizona is really just, I think we are going to see home pricing. We're going to see the real estate values continue to climb much steeper than we are going to see in many other states.
Right. Residential's been impacted by California for several years now, but you're seeing it in business and industrial. Their companies are moving over here as well.
Yeah, and we saw that also in the commercial space as well, right? There was a number of 1031 buyers coming in the
Right.
existing multi. So when they were, in California getting a 3 cap, here they could come here and get a 4.5 or a 5 cap.
Right.
And now we saw that compression when the debt markets were really low. And then obviously it's climbed up a little bit, but it's not kind of par to where the capital markets are currently. So you're still seeing sub 5.5, 5, and then sub 5 caps in the 4.7 to 4.8, depending on the submarkets.
Okay. Okay. So a couple months ago, we started up kind of a new shop. Do you have like civil engineers and other people helping people develop the land? Is it a team in that sense?
No, not in that
Okay.
sense. I have an extensive network of third-party vendors that I refer clients to. I don't take referral fees, but it's just a business relationship, right?
Right.
We work with people who we like to work with and then obviously want to promote them,
Right.
and ensure that a quality of business relationship, that continuity of care is continued for the client, regardless of who is helping them. So whether it's from bankers, mortgage brokers, looking at third-party inspectors for a physical inspection,
Right.
Alta surveys, your environmentals, and then having a network of contractors, whether they're building a specialty, like they're just building industrial, they're doing TIs for tenants, they're doing, iOS yards, they're doing whatever it is that they're building. I try to make sure I have that kind of specialty contact also in the network for clients
Right.
to have as a resource.
Okay. And you've been doing this for how many years?
I've been a broker for just going on 6 years. June will be
Okay.
years,
So your
and
network is been established longer than that.
it has been established longer than that. Yeah, I've been in the real estate industry since I was 21, so 2011. And I started in the fix and flip background. So starting with 18% hard money loans. So when people were, crying that mortgage rates have gone up to 7% or 7.5%, I was elated when I refinanced my first three hard money loans that were fix and flips that I ended up keeping as rentals because that market was just going fantastic.
Right.
And traded down to a 6.75% and a 7%.
Nice.
Yeah, so I was like, woohoo,
Yeah.
this is great. So
Right.
yeah.
And then pre-COVID, you didn't refinance those?
I actually sold
Okay.
my rental portfolio, the majority of it, back in 2018.
Okay.
A little sabbatical, went to Europe, came back, and then was bored and trying to find a new path. And I really wanted to get into the development space. But unfortunately, in 2018, there were no developers hiring in Phoenix, and I was not interested in moving out of state. And so one of my very first client and a mentor, who's a very big institutional name that people might know, like Rockefeller of New York, steered me over to the brokerage side, just kind of having my master's in real estate development, coming from the owner operator, having that background in property management. And that's
Right.
really kind of how I got into a lot of the buyer broker representation for existing multifamily. And then the development side was just a no-brainer with the clients being referred and just kind of knowing what to look for in terms of land for development.
Why did you want to get into development?
I love real estate, but more importantly, I care about the quality of real estate that comes to where I live, right? So when you talk about these legacy markets of New York, you talk about Chicago, you talk about LA, everyone, regardless or not they're in real estate, what do they always talk about? They talk about the architecture and they talk about the vibrancy of the community.
Okay.
And to me, that's what real estate is. It's does the product make sense for the community, and is it built to a quality that's going to have a lasting impact? And so I really am passionate, and that's one of the things that I do want to get into. So even the type of clients that I'm working with, when I'm finding them like the perfect property to build, a high-rise multi-tower that's very like heavy on art and arts and culture, working with one of my nonprofits, and they're building their first legacy housing project for adults with disabilities in the West Valley. Like finding all of these that are like the perfect location, it meets the requirements, but it's also going to leave a significant impact within the community from the
Right.
quality of the project.
Awesome. That's awesome. Sounds a bit like you're biased towards or against the sprawl, little cheap builds that are out, that people do, and more like mixed use, maybe infill mixed use stuff.
Yes and no, right? So I believe that there is a time and place for certain products. There was a time and place for the sprawl. But I also think it's not just about build for the sake of building. I think that, there's pockets of property in Phoenix where, it's all next to 1 acre ranches. And so going to a 3-story garden walk up, I don't think it's necessarily the best transition. I also think that there's certain uses that are not. And so I really do think it's a case by case basis, but I am not against, if there's a 3rd acre lot, it was a great thing that, for instance, we approved the ancillary dwellings, the
Right.
additions. But I think it's important that people really do it in a code compliant way because
Not like San Diego.
yeah, not like San Diego.
There's like nothing. They can build as many as they want now, right? Or something like that.
I don't know, but
Parking be damned. However many they can fit on their property now. I think the mayor said. I don't know. Okay.
yeah, I don't know. We won't get into that politics speaking, but I think there is, if you do things with a strategic plan, really taking into a overall look at what is happening in that community, in that submarket, and also a broker that's very insistent on looking at micro submarkets. And kind of the case in point I give to every client is the north side of University and Mill Avenue, or Farmer, which is the next street over, has a completely different feel and energy and vibrancy and the types of development that are in that neighborhood versus the south side of University, which are completely different. And it's both the North ASU Tempe submarket, but they're two different neighborhoods. And that's kind of the level of minutia that I get into looking at development projects with clients and finding really what's the best spot, but then also looking for clients when they're doing existing acquisitions, like if they're looking for a specific type of warehouse, or if they're looking to relocate a business and they're looking for like an office space, and really kind of getting them in the car to physically feel what is that space that they're looking for, and really kind of hone in on that submarket.
Right. So you got to drive it.
Yes.
So I focus on multifamily, and I like to, drive through the neighborhoods and when everybody's not home, and then again when they are home, and check out the grocery stores and see what people are doing and what the vibe is. But I'm gonna go on a limb here and say you have like an artistic side.
Little bit.
And so you're almost talking about master planning, right? Bigger scale developments and communities. Is that something you have recognized interest in?
I actually have not worked in any truly large scale master plan development. Nathan and Associates and Insight Land and Greg Vogel's team are kind of the big boys in town that really focus on the master plan. I would say my specialty is pretty much like 50 acres and under. And that's you can look at it as a master plan, but it's typically not. Like the 50-acre stuff is more of the industrial, or like a 30-acre will be kind of like one multifamily project. So I wouldn't necessarily say it falls into the master plan communities. But I think there's definitely a time and place for that. And maybe that'll be in my next leg of my career. But right now I really am passionate about like the infill stuff and finding clients the right property, regardless kind of industrial or development or multifamily. So
so you work with hotels, hospitality, you work with industrial, you work with multifamily. Is there an asset class that you don't operate in?
Retail. I do not touch retail and hotels. I will tell you,
case by case basis.
Case by case basis. That's a very also specialized asset class of real estate. And so for the 3 clients technically that I represent for them in the hospitality sector, they are operators. They run all their pro formas. Like it is absolutely nothing that I touch. It's just, Anna, I want this, and go after it. So that's from the buyer broker side, that's a nice skill or like an asset to have, to be able to, regardless of asset class, just know how to negotiate a transaction. And again, I did a lot of my own acquisitions pre-brokerage. As an unlicensed agent, it was all my own acquisitions. And so cold calling and reaching out in different various forms to try to get a hold of ownership, and how do I structure a deal, right? Because some people necessarily aren't motivated on just cash quick close. Okay, so what is it that you need to get this deal done? And being flexible or creatively thinking, whether it's an installment sale or seller carry, or you do it, a lease purchase or whatever it is. And that's what I'm so passionate about, the flexibility that real estate offers.
Right. When you say that, I'm reminded of a story of somebody who nobody could get this seller to close until they asked what the problem was. And it was because they didn't have a place for their dog.
No, there's been, some crazy things like that. And, it's really part. And I tell everyone, if you want a non-boring desk job, get into real estate. So get a view everything under the sun, aside from property management, but that's a different story.
All right, let's back up and get into property management and your start in real estate.
Yeah, so my parents were owner operators. I'm first gen American. So they started in Chicago and kind of built pull yourself up by your bootstraps with a duplex, and then kind of kept 1031 exchanging. And then back in the 70s and 80s, wraps were still a thing.
Right.
Not so much now. Good luck trying to get a bank to agree to a wrap.
What do they call it? Who's the guy? It's creative finance. So,
a seller carry, technically, in order for it to convey on a sale, that's going to have to be free and clear. So the wrap was you could have an existing debt in place, but it's not an assumption because you're not assuming that loan. The original seller is still maintaining.
Right. No, subject to is Pace Morby was who I was thinking of. If you're
yeah, but that's again past all kind of the Dodd-Frank Act, right? That really transformed a lot of the real estate legislation. It also dictated a lot of like your opportunities to do seller carry financing, mostly predominantly spurring from the residential sector, right? Shark lending, but there's a lot of these things that kind of have shifted, and so getting a lot of the subject to or the wrap financing is pretty much not existent. So they're tough.
Right. Okay. So sorry, please continue with your origin story.
So I have two siblings, and I am the only one in real estate. And my parents were always like, in order to be someone's boss, you have to learn how to do the job correctly and be able to explain it. And so I was in the office learning how to do leases, how to do renewals, looking at just overall management side and kind of the accounting of multifamily. And then on the backside, my dad was a jack of all trades and exceptionally handy. And so he also was instilling independence and being able to be self-sufficient. So like, how do I change a light bulb? How do I unclog a toilet? How do I unclog a sink? There is a difference in the type of plunger that you need for everyone who wants to learn. Give me a holler or watch YouTube. And so my dad kind of taught me all of the like tangible, like maintenance side skills and like just general things to look out for, right? So when we're looking at, for instance, a lot of the C-class assets in the multifamily space here in Phoenix, so that's going to be your 70s going on into now edging into your 80s. And the first
iron pipes
is cast iron, clay pipe. I'm looking at how much oleander is right immediately next to the property. And I'm looking for those eucalyptus or big pine trees, because the very first thing I tell my out-of-state clients is we're getting a sewer inspection. On one of them, on an existing office acquisition for my clients, it was their very first commercial acquisition. And I was like, gosh, this is an 1986 vintage office building, light value add, great bones, just really like light cosmetic refresh. And come to find out it had cast iron and then able to get a discount for that. And then post a due diligence, importance of having an agent that knows and keeps on top of helping you read a title report if you're not familiar with those. And we were able to get them an additional $50K on for a cross parking access easement recorded post due diligence. So those are important, folks. Don't forget those.
Yes. So I have friends whose parents were in real estate, and as kids, they had to go clean the properties and other stuff, and they're not in real estate today because of that. Why are you the only one of your siblings?
I My parents also owned assisted livings and they had
Okay.
lots of employees. And that was, actually a great, experience as a kid going to the assisted
Did
living
did
facilities
did
as well.
all the family work in the care homes?
My parents managed them, but we had a lot of employees. And then as part of having a company with lots of employees, people call out sick, life happens, and it
Sure.
would typically be for third shift. And then my parents would
Sure.
cover it. So I like keenly remember at age 12 going, I am never going to have a company where I have employees.
Right.
And real estate, I wanted to be a business owner. I actually wanted to be a lawyer for a long time. And real estate just provides a lot of flexibility. You can be as involved as you want to be, or uninvolved as you want to be. And it also, from a tax perspective and looking at tax sheltering and kind of wealth building in terms of legacy and heritage and all of these things, I think it's just a phenomenal business to be a part in. And there's so
Yes, it is.
many different avenues of real estate. I mean, you can specialize in a specific asset class. You can go nationally. You can just stay in your own neighborhood. I mean, the world really is your oyster in terms of that. But as long as you understand the fundamentals of it,
Right.
you really can take that knowledge, and all it is just get up to speed on that
Right.
specific market that you want to be investing in.
You can swing a hammer or not swing a hammer. You
Exactly.
can do an Airbnb or just a real B&B, right? And play
Yeah,
hostess or host or something.
exactly.
And
Exactly.
there's a lot of unique options there.
Yeah, it really, and so real estate, yeah, the brokerage was not where I never saw myself becoming a broker and working with clients. But it's something I absolutely love. I especially love the buyer broker representation, which is not often the case. But like I said, I'm very passionate about helping clients find the right property,
Right.
whether it's existing or a new development project, and kind of, having it all come together.
Have you ever um, partnered with your clients?
I have not. I try to keep that very separate. When I was active in the real estate, I did have a limited equity partner, and
Mhm.
he was my money backer growing the multifamily portfolio. And then when we had sold that, he kind of exited out of real estate fully into retirement. But I think there is a time and place for that. In kind of the years working up to it, I didn't feel that that was an appropriate space. There's some brokers that like to do that, but I always say, for me personally, I think it's very important to know who you are doing business with.
Sure.
What is the worst case scenario if there's a massive economic downturn? Is it just a one-off basis, or is it a strategic kind of alliance? And how does that play out from a short-term and a long-term perspective to meet your investment goals?
Right.
So it's just preference, but no, personally, I have not.
Okay. Okay. Well, so when and why did you exit out of the owner operator space?
I thought 2018 was a good time to exit.
Okay. Market
Looking at
timing.
the pricing, I was like, wow, this is
Yep.
crazy. Who's going to pay,
How could it go higher?
yeah, how could it go higher? And then lo and behold, could have doubled that what people were paying. But then again, who would have foreseen that, you could tie up a 40-year fixed 2.5%, Fannie or Freddie loan on a multifamily asset.
Right.
No one really was expecting that. So the guys that were in the syndication space in the run-up of 21, buying, peak of the market,
Right.
pricing, the ones that are in a great position now are the ones that tied in that great low interest rate.
Yes.
The ones that are not, and that we're starting to see some of the distressed transactions, very little, but there is starting to
Right.
come, not just in the multi, but just in general. They bought at the peak and didn't account and hedge for the interest rate. And then another big factor that we saw in the market that I've done several distressed transactions with, representing sellers in that instance, was cross collateralization. That seems to be
Right.
a consistent theme. in every kind of upturn and downturn is folks get a little too excited about cross collateralizing to kind of push and push. And then typically we'll see the deck of cards fall.
Right. Right. Yeah, I haven't, fortunately, I've not been there, but I know people, particularly I know people who did that, who lost huge portfolios of single family houses back in 2008.
Right. Not just in the single family. I mean, we saw it several in the industrial space. I've seen it in the existing multifamily space. Or folks would cross collateralize some paid off assets to try to get a project up and running. And then on a piece of dirt that didn't happen because of interest rate and now equity, and the pro forma just doesn't work at this point because we're not seeing a 2.5 cap exit. They're hurting, and it's having that difficult conversation to say, hey, cut your losses before you lose it all.
Right.
It's better to lose a finger than it is to lose your whole hand or arm. So,
Right. So, a lot of accomplishments, a lot of knowledge and skills. Seems like, and you're in a good spot and you're happy where you're at. But what sort of future do you see? Right, if you put all those things together, it seems like you like run M&A for a real estate development group at some point or something.
yeah, I just recently had a client ask me that. It's not in the near future, but maybe down the road in like 5-year plan. But right now it's really conquer the industrial space. At this new company, I am working nationally, fantastic resources. And so helping clients buy, manufacturing space out in the Midwest and, 750,000 square foot warehouses. Working with developers on project expansion here, working at stuff down near the border and across in Mexico. So for the next 5 years, I think I'm going to be busy with that.
Sure.
Still very passionate about educating clients about real estate. And like, that's one thing is if you're going to get into it, don't overthink the deal. My clients, some of my biggest developers, I go in there with a piece of paper and here's my quick residual land underwrite, and I think we should pursue this deal. And it's kind of crickets in the room, and they're like, Anna, how are you doing that? And it's just a kind of interesting conversation because I stand by that. If the deal doesn't make sense on the back of the napkin and you have to have this 10-page pro forma to make it work, it's probably not an appropriate deal to be investing in, unless you have lots of cash to throw away. But otherwise, throw it my way.
Right. Okay. So I could talk to you for maybe we'll have another episode and have you on again. But I do like to get in a reflection question for everybody as we wrap things up. What do you wish you knew sooner about building wealth and success in your career? You had a pretty good start, so it's.
I just I would say still be very proactive about having very honest and transparent conversations with your CPA. And I will tell you, when I was flipping property, I did not know about a hold open policy. And then as I moved into the rental space and kind of selling, I was just a little bit impulsive and be like, I'm just going to sell it. And so for me, there could have been a little bit more, had I waited or had an initial conversation, probably could have had a little bit more in tax savings. And then my other thing that I am just shocked at the number of investors that I have conversations with that are not familiar with cost segregation studies. I really think that is such an underutilized tool, not only as an active investor, but for folks in the estate space. If you have an inheritance and you are dealing with an estate attorney, your very first question better be, who's a good cost segregation analyst that you can recommend me to? Because there is a lot of tax benefits that can be had from an estate side, as well as just an active overall your own investment purposes. That would kind of be my two really big takeaways. in real estate.
Okay, good stuff. Good stuff. If you don't mind, we'll backtrack on that second one for a minute, Anna, and just explain to our listeners what cost segregation is and how, even with the current administration bringing back probably in June bonus depreciation, how that impacts investors. And what that's...
We're keeping our fingers crossed on that one.
Right.
Cost segregation is essentially a study. And what it does, it's a third party that will come out, review your property. It can be a single family residential investment. It doesn't matter what the asset class is. But what it does is it kind of looks at
not land.
It has to have a building, right? Yeah, not land. I wish. My goats are on there. No, I'm kidding. So it has to be an existing building on there. And what it does, it looks at the life of the building. So everything from your mechanical systems, your roof, your lighting, windows, fixtures, all of these things. And it essentially, instead of over the course of a 10, 20, 30-year depreciation schedule, it accelerates it to year one or year two, depending. But so it's essentially the first year or the second year when you're into acquiring an asset. And obviously the higher the value of the asset is, kind of more of the depreciation. So if you had a really great year in real estate, and you didn't get your cost segs done, go back, talk to your CPA. Maybe it's worthwhile to also do an amendment to get a cost seg done.
Or as you said, you came into some money somehow, inheritance, whatever, right? You need some losses to offset all that for tax purposes.
Exactly. And so on the estate side, this is not legal, advice or at any
disclaimer.
Disclaimer. But it's really good. What you can do is upon the death, you can get a cost segregation done for what the value of that estate is appreciated. And then essentially upon the conveyance into the new, it's kind of restarts. And you could get a second cost seg now as the new owner. And then have your
with the step up in basis, right?
Exactly, with the step up in basis. So you get it's like a double bonus. Right. So it's very beneficial, very important. And again, I just cannot stress that enough. Cost segregation studies. I've had folks that actually didn't know about them and ended up fixing and amending returns, and had one of them actually had over $300,000 in tax savings. Nice. And for an exchange of, let's say, $30,000, you're saving that much. It is astronomically important to have this as a part of your investments, and just overall tax planning strategies.
Right. Excellent. All right, Anna, thank you. And for our investors, yes, we do cost segregation studies on all of our multifamily deals. Pretty much all of them. So yes. Okay. So, all right, if people would like to connect with you or learn more about you, what should they do?
You can find me easily on LinkedIn, and literally on my banner, it has my email, anna.sepic@srsre.com, and it literally has my cell phone number there too. So you can call, text, email. Spoken
like a broker. Nice.
Yeah, I answer my phone.
Anytime, middle of the night.
I'm not a residential agent, so hang on. I was not going to call at 12 o'clock at night, but that's just when I'm in Europe working remote. But honestly, yeah, I do answer my phone calls. If you want to sit down, have a conversation, depending on the asset class or investment needs. I have amazing brokers in my referral network that I work with that can assist, whether it's leasing needs, whether it's acquisitions of some kind, if it's a specialty niche, you're wanting to just get more information, and really look forward to hearing more from folks. And as much as I can be a resource, don't hesitate to reach out.
Excellent. Well, it's been a joy. Thank you very much. Thank you, everybody, for watching and listening. Thank you again, Anna Sepic, for joining me today. We appreciate you sharing your insights into real estate and investing and all the asset classes in Phoenix. Awesome stuff. Thank you very much.
Thanks, Tim.
Inspired by our guests? Visit phoenixprosperitypodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.